Hello and welcome. You tune in to Market Fatafat with me, Ankita Saxena, and with me, as always, is Snehi Shah. And this is the show where we take you through all the stocks that are buzzing away in trade, either on the back of news flow or on the back of technical charts. But first up, let's take a look at how the markets are shaping up. Snehi, a bit of a trepidation coming in the market right before the MPC results, where we are expecting a 25 bips rate cut.
Absolutely.
Look at Nifty. I mean, it is hovering around the day's lows for a while now. Nifty Bank in the red, but has managed to show a slight bit of recovery of 80 odd points.
You know, since the last couple of days, it's been the banking sector that has shown resilience today. That has also slipped into the red, but its cuts are lesser than what the Nifty is seeing right now. Nifty Bank is trading with cuts of 1/10%. However, Nifty 50 is down almost 0.5% and roughly 100 points lower and 180 points lower from the day's highest point for the Nifty 50. Sensex also at the day's lowest point, a 0.4% cut coming in on Sensex as well. India VIX has spiked up 1.6%, so that is something that needs to be watched out for carefully. When you take a look at sectoral gainers and losers in today's trade, pharma seems to be the only sector that is holding on firmly to the gains that it has clawed towards the start of the trading day. 0.8% uptick coming in on the pharma index. IT is very flat. However, everything else, including bank, PSU banks, media, auto, metal, FMCG, energy and realty are in the red right now. Nifty Realty being your biggest loser, sectoral loser, and Nifty Realty is 1.3% lower in the red. Taking a look at what the broader markets are doing, the Nifty Midcap is underperforming the street. A sharper cut coming in on the Nifty Midcap index, that's lower by 1%, and the small cap index that was holding on to the gains earlier in the trading day has also slipped to the red now. 0.3% cut coming in on the small cap index as well. So that's what the market construct is looking like right now. But lots of stocks to talk about today, Ankita.
Absolutely. So let's get started then. Ashish Kyal, who's the founder and CEO of Wave Strategy Advisors, is joining us on the technicals, and from our research team, we're joined by Gaurav. Hi, good afternoon to both of you. Thank you so much for joining us, and let's get started with all the stocks that are in focus today. First up, this name is soaring away in trade amid this market volatility. That's Aarti Pharma. In fact, the entire pharma pack, as Nehi mentioned, is doing pretty well for itself. Aarti Pharma is doing well on the back of the strong Q3 results that it has posted. It's trading with gains of almost 5% right now. The net profit has seen an uptick of 40% on a year-on-year basis at 74 crores versus 53 crores. The EBITDA has also seen an uptick of 34.4% on a year-on-year basis at 129 crores. The margins have also expanded 259 basis points on a year-on-year basis to 23.9% versus 21.3%. Good set of results coming in from Aarti Pharma. On the back of that, in fact, the stock was up 7% in the morning, has given up those gains, but nonetheless trading with gains of 5%.
Okay, so that's the take coming in on Aarti Pharma. Let's move away from that. And actually, Zydus Life is the stock that you've picked out for us on the charts. Give us a sense of what the stock is looking like on the charts. Is it looking attractive to you, and what are the next key levels to track?
Look at Zydus Life, the stock made a low around 900. From there, showed a very smart recovery on the upside, and it has now also managed to cross that 20 DMA positively. So looking like overall sector also on the pharma side looks to be positive. I think Zydus Life can move towards the level of 1100 on the upside. On the downside, one can maintain a stop loss of around 960 levels.
Comes to Zydus Life, let's move on, talk about a stock that is under immense pressure and has been since the get-go. Despite seeing some recovery coming in, the stock still continues to be deeply in the red, and I'm talking about Swiggy in today's trading session. This is on the back of their Q3 earnings. Overall weak set of numbers coming in. The net loss and the EBITDA loss have widened on a sequential basis, and they have also missed our street estimates. Largely, revenue is in line with what we were expecting. The food delivery GOV is up 20%. We were expecting 19.2%, so largely in line over there. However, what has missed expectations is the quick commerce growth. That has come in at 88% on a year-on-year basis. We were expecting 100% growth, so that's not looking good for the quick commerce business. Also, there's been rapid expansion on the back of the dark store expansion, and a lot of investment has gone on that front as well. They're rapidly adding more dark stores on that front, so that is something that has caused pressure on the overall numbers this time. Out-of-home consumption has done really well for the company. However, if you take a look at what the brokerages are making of these numbers, Macquarie has maintained an underperformed rating with a target price of 325 rupees per share. UBS on Swiggy has also maintained a buy call with a target price of 515 rupees per share. That's a lowdown on why Swiggy was under pressure and what the brokerages were also making of it. That stock lower by almost 5.5% as we speak.
All right, weak set of results coming in for Swiggy there. After we also caught up with Rahul Bothra, the CFO, and Rohit Kapoor, who's the CEO of Swiggy Food Marketplace, to understand their outlook and guidance on both the food delivery business and the quick commerce segments. Let's go across and listen into what they had to say about that.
It's a combination of both food delivery continuing to accelerate its path towards steady state profitability. So yes, you have seen we have expanded our EBITDA margin to 2.5% in the food delivery business, which is increase of 80 basis points from the previous quarter. At the same time, our medium term guidance on the food delivery business also remains at 5%. So we will see this quarterly trajectory towards the medium term guidance of 5% positive EBITDA. As a combination of food continuing its acceleration on the EBITDA as well as quick commerce, getting to break even on the contribution margin, we believe that we can still deliver, a positive EBITDA by the OND quarter this in the next financial year.
I think between a combination of under penetration, which remains medium to long term in the food services, food delivery market in India, between the pace of innovation and execution that we are becoming better and better at, and third is the stimulus which is coming in the form of tax. But I think we remain cautiously optimistic on the potential for the sector.
Okay, so that's the word coming in from the management of Swiggy, but let's also take it across to Gaurav. Now, Gaurav, you've picked out SBI. Numbers are expected very soon, in fact, anytime now. Tell us what we can expect to see from these numbers.
Well, yes, when it comes to SBI now, people are expecting higher than industry growth for advances. They're expecting around 14% growth in terms of loan book, and deposits may grow somewhere in the range of 11%. Now, that will not be a constraint because of the low CD ratio that the bank has. And as a result, when we talk about net interest income, they're expecting around 7% growth here, because we may see some pressure coming up because of the global benchmark rates which have gone up. Apart from that, NIMs are also likely to decline almost by 1 to 2 basis points, which is actually a marginal decline on a sequential basis. But on the other hand, when we talk about PPOP, they are expecting a growth of around 22% here because of the lower cost to income ratio, and at the same time the asset quality is also likely to remain stable, and that is the reason why they are expecting credit cost to remain stable. And when we look at profitability, they are expecting around 70% growth in profitability on a year-on-year basis for SBI. Now let's not forget that last year in the same quarter there was an impact of a wage rate revision, and that is the reason why these numbers look elevated. But overall, good set of number is what we are expecting from SBI. As we speak, the stock is currently under pressure, but definitely watching out on how the numbers come out from SBI in third quarter.
Right, CS Sethi, chairman of SBI, to join in the presser at 2:15 post SBI posts its quarter 3 results. But for now, let's move on and get Ashish. Zansar Tech is the name that he picked out for us. That one is up more than 1.5% in trade today. 6 months performance also, it has given some good returns of 24%. Do you see the uptrend to be intact going ahead?
Yes, indeed. It looks like after giving a strong move, the stock consolidated over the past few days, and it is now getting ready again to resume the up move towards the level of 1000, which is near the previous peak high. So overall trend looks positive, and the stock has touched 52-week high when majority of the stocks are still substantially down from their lifetime high level. So Zansar Tech has outperformed, and we are expecting a target of 1000. On the downside, one can maintain a stop loss of around 880 levels.
Okay, on that note, we'll slip into a very short break on this edition of Market Fatafat and keep it going with all the big buzzers just on the other side. We'll be right back.
Welcome back. You're tuned into Market Fatafat, where we are taking you through all the stocks that are in focus today. Let's resume then. Ashish, you picked out a jumble fertilizers for us. Tell us, what are you seeing on the charts for this one? We saw a bit of a re-rating coming in on the fertilizer space, but as far as jumble fertilizer is concerned, tell us, where do you see, because it hasn't really done much in the last 6 months. It has given some decent moves in the last 1 month. It has moved up 8%. Tell us, do you see further upside here?
If you look at jumble fertilizer, the stock was consolidating for since almost a year now, and a breakout is due. The volumes have picked up lately, and there is a possibility that we can start seeing a positive price action on jumble fertilizer for a move towards the level of 550. On the downside, the stock has a very important support, which is around 500 levels. So as long as 500 is intact, we can expect a 550 target, and the risk reward looks appealing at the current levels.
All right, risk reward appealing for Chambal Fertilizers. But moving on to from fertilizers, let's move on to the pharma pack that's doing pretty well in today's trading session. That's the only one that's holding on, amid the market volatility. Investec has come out with a note on the pharma pack. They believe that the US unbranded generic drugs supply has no further room for any deterioration in economics. Any tariffs and potential onshoring would be counterproductive and shore up the GX prices. On the contrary, now, they do not believe that the economics have improved enough for the ongoing supply squeeze, but they haven't heard any negative comments on the pricing globally. But if the tariffs indeed are are a reality, if the Trump tariffs kick in, the sector can materially re-rate as they see the supply squeeze worsening. A favorable US dollar versus INR that imposed tariffs on China and all are favorable for Indian pharma. They pick Aurobindo Pharma, Dr. Reddy's, this Cipla. These are all the top picks for Investec. Lupin, Gland Pharma, Zydus, Sun and Glenmark are also other beneficiaries of their coverage. In the back of it, the entire pharma basket is really buzzing in trade today, especially names like Cipla, Dr. Reddy's that are their top picks, up to 2.3%, 1% on the back of that Investec note.
Okay, so the pharma space is in focus today, and of course, it's the only sectoral gainer in today's trade. It's doing well on the back of this note. Ashish, coming back to you, you picked out Ujjivan Small Finance Bank on the charts. Now, amid a market that's showing some weakness today, this stock is holding up well today. However, last 6 months, last 1 year, this stock has seen a slight bit of a pressure getting built up. What are the charts looking like going ahead, and can we expect better days for this stock?
Yes, indeed. It looks like, because after bottoming out around 32 levels, the stock has shown a very stellar up move from there, and already at 38 levels, it has broken the long-term trend line resistance, and it's trading even now on a bullish territory. So the overall stock is now on the positive side. We can expect a move towards the level of around 42 on the upside over near term, and on the downside, one can maintain a stop loss of around 36 levels.
Those are the levels to watch out for when it comes to Ujjivan Small Finance Bank. Next up, let's talk about DLF. This stock is in focus and was doing very well earlier in the trade. However, it has given into the market pressure right now. But nonetheless, very slight positive bias coming in on this stock, and it's in the green. Now, there's a CLSA note on DLF where they've upgraded the stock to high conviction outperform call and target at 975 rupees per share, which is significantly higher than where the stock is trading right now. They see compelling valuation with strong growth outlook, and the stock has gone from trading at a 15% premium to NAV to a consensus of 20% discount right now currently. However, its pre-sales continue to grow, and they expect DLF's growth momentum to continue to see adequate new launches over the next 8 to 9 quarters. There is unsold inventory. However, strong business modes are also present in the company. The company has a healthy balance sheet, strong rentals, healthy cash flow, and balance sheet offers downside cushion as well. All of these factors are currently being liked by CLSA, and on the back of that, they've made this stock a high conviction outperform call, target price at 975 rupees per share.
All right, moving on then, Gujarat Gas. Gaurav, you picked out Gujarat Gas for us, an earnings candidate. Tell us, what does the report card look like?
Well, yes, when it comes to Gujarat Gas, we are seeing weak set of numbers from the company in third quarter. So let's first look at the numbers. Although net revenue has increased almost by 10% on the sequential basis, when it comes to EBITDA, that has gone down almost by 26%. PAT has also declined almost by 28%, and as a result, when we talk about EBITDA margin, we are seeing a compression of around 400 basis points on a sequential basis. Overall, when we look at the numbers, mixed volumes were seen, and at the same time, margin impact was because of the higher gas cost, and that is the reason why we are seeing miss. When we talk about the stock price also, it is down, and when we look at the brokerages also, they are also being a little pessimistic about the stock. What they have highlighted is that the higher OPEX in this quarter is actually something which led to EBITDA miss, and at the same time, although overall volumes have rose only by 3%, those were aided by the jump in CNG volume, but overall, other than that, the volumes were actually a little lower. Apart from that, when we look at some other notes also, now Gujarat Gas, CLSA has now maintained its rating and the target price, but again a pessimistic note, and as a result, we are seeing some pressure in this counter. So definitely watching out on company and how the commentary comes out from the management as the call is going on as we speak.
Okay, so that's the outlook on that stock. Let's move on. And Ashish, Castrol India is the stock that you've picked out. This stock has been gaining one way. Even today, it's trading with gains of 6%. Ever since its numbers came out, rather, this stock has been doing very well. But over the last 3 months, slight bit of a pressure is what the stock has seen. Do you believe that this 2-3 day rally that we've seen on the stock on the back of its good numbers can translate into some technical soundness also, and the stock can do better on the charts?
Yes, looks like, because after a long time, the stock has shown a very strong positive trend, and there has been short covering with fresh buying that has been emerging here. along with good volume. So we can say that over short term there can be some dip, but use that as an opportunity to buy because the overall trend look to have reversed after a long time. And we can expect it to reach towards the previous peak, which is around 225 levels. And on the downside, any dip towards 200 can be an opportunity to re-enter the stock, maintaining a stop loss of 195.
All right, moving on from Castrol India to Trent that has come out with its result today during market hours. If you look at the overall numbers, it's a slight miss coming there. Revenue slight miss. PAT was below expectations. Slight miss coming in on the EBITDA front also, and the margins also gave a slight miss to what we were expecting. And you can see the result, a shade of red there with cuts of 1.2%. Now let's look at the profits. The profits came in at 46 crores versus a loss at a loss of 46 crores versus a loss of 11 crores on a year-on-year basis. The EBITDA was also down 60% on a year-on-year basis. The margins were down 491 basis points on a year-on-year basis. Now, the management also spoke. Noel Tata, chairman of Trent, was speaking, and he said that they are on track to strongly expand their reach and at the same time improve quality of their stores. During the quarter, they have opened 14 in the West Side and 62 Zudio stores. And in quarter 3 of FY25, the fashion concepts registered the highest single-digit LFL growth. The emerging categories contribute over 20% to their revenues. Over 9-month FY24, they have registered a volume growth of 39%. In fact, Trent has been under pressure ever since that news of Shein coming back to India, through a tie-up with Reliance has broken out. Trent has been under pressure, and quarter 3 results have been no breather for them.
Well, absolutely, that's the lowdown on Trent coming in. Let's move on and talk about yet another earnings candidate, numbers that we've seen just a short while ago, and that's Uno Minda. On a consolidated year-on-year basis, revenue is coming at 4,184 crores, which is up roughly 19% year-on-year. Net profit is coming at 254 crores, which is up 24% year-on-year. The EBITDA has also gone up by roughly 20.5% on a year-on-year basis. Margins have been rather flat at 10.9% compared to 10.8% on a year-on-year basis. Some key announcements that the company made along with its numbers. 2 announcements. First one, Uno Minda has approved the fundraising and they've received the in-principle approval for issuance of non-convertible debentures for up to 500 crores in one or more tranches. So the fundraising has been fixed at 500 crore rupees. Also, the board has considered and approved the expansion of their existing Hosur plant by increasing the overall capacity up to 15,000 metric tons per annum, along with the construction of a new shed for a new paint shop. The total capital expenditure for this facility now stands at an estimated 65.6 crore rupees. So, the 3 important points to watch out for when it comes to Uno Minda: their earnings, their fundraising, and their capacity expansion announcement. On the back of that, the stock is seeing some pressure. However, on the back of the numbers, 0.6% lower is where the stock is.
All right, well, that was the last stock for Market Fatafat. We're completely timed out in this edition of Market Fatafat. Ashish and Gaurav, thank you so much for joining us today. Snehi and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Stay tuned to ET Now for more market action.